Where are we here today? Up again? Oh my God. Bit in that wacky whipping stuff that was going on. Finally, things got calmed down. Anyway, so where do we go from here? Well, believe it or not, it becomes tougher as you get into these new all-time highs because there is no reference point to say, hey, there's sellers up here. This is where we should look to sell. New all-time highs. What can we do? Well, you just assume it's going to go up until it stops. How do you determine when it's going to stop? Well, we do have a systematic way and simple common sense to say, hey, if it breaks a prior bar's low, there's been some change. Well, it doesn't mean it won't keep going up, but in the moment, that's your first reference point, objective one. It's not some Fibonacci level line in the sand based on magical, mystical lines. So that's yesterday's low right now. Now, as intraday traders, we can use hourly swing lows, which sometimes might be the same reference point. But here, this is a 24-hour chart, hourly time frame, and higher highs, higher lows, very shallow retracement. But again, we have a step-by-step systematic approach called MasterTrader Technical Strategies. And I've been using it for a very long time because I wanted an objective way not to be on what I call a white knuckle ride. What is a white knuckle ride? Get in a car and do 120 miles an hour, scare yourself to death, and you're gripping the steering wheel until your knuckles turn white. And when you risk your money in the market, it tends to be some tension associated with that when you don't know what you're doing and you don't have a method to objectively monitor what's happening. So you have to make some choices, time frames that you're going to use, that you're going to trade in, and so on. So if it's the daily chart in a situation like this, it's a prior bar's low. If you're an intraday trader, you can move to the hourly chart and start using swing lows. Is there prior support? In this case, it did pull back to what we call minor support. At this time, it didn't pull back. It created support, right? It didn't pull back to minor support, which was down here. So it had a little minor shakeout down here, a pivot, and it created support and ran higher. Super bullish. Now it's pulling back to minor support and pushing up. A little less bullish because buyers waited till it got to support. Now it's pushing higher. So you mark off that swing low, and now you continue to do that process systematically. Now, if you choose to go down to smaller time frames, you're going to see more swing highs and more swing lows, and double-sided sword. You might get out near the top. You might get out earlier and then prices go higher. No way around that one. You got to pick what it is that how you're going to monitor it. So as whatever kind of magic we try and do here in our trades and management and things that we pick, you choose the time frame and there's the pluses and minuses that come with it. So just to give you a little reference point, and as you go down to smaller time frames, you're going to see more reference points. So here you have on the 5-minute chart a break of trend. And it traded under major support and went down to the next major support. But we have more rules. It can then repair the damage. You've heard me use that term a few times, and this is an example of that, where it created a pivot and it retested and it went back up. And when you see that, you can always, if you like, swing back to the higher time frame. So little education there, how to use trend analysis and follow the trend and so on. And right now, the markets are going up, and we'll see where this day ends by the end of the day. Qs look the same, finally broke out to new all-time highs, look fantastic. Our internals as of last night did not say run for the exits. The wrong way option traders, while intraday yesterday started betting a little heavy on the calls. Our moving average is not at an extreme yet. And that did stall things for a little while and then worked out again as they started to back off. So as the market pushes higher, eventually they are going to believe that this market is going up. Why don't they believe it now? Because they are influenced by opinions about nonsense things, mostly revolving around overbought indicators and Fibonacci extensions. So be it. Dow, that article that I wrote about the Dow making new all-time highs, the link was broke yesterday. That's been fixed with the information that was updated with that server change. But anyway, this appears like it's going up to make new all-time highs. It looks like it's certainly going to retest it, but we'll see as long as it doesn't break a prior day's low. One of the things I wrote in that article is what would turn us short-term bearish? Making new all-time highs, the Dow and the transports. While that's bullish, Dow theory confirmation of a bull market. Thank you very much, Mr. Dow theory, finally. And the wrong way option traders betting that the market's going to continue to go higher. When that happens, we know a pullback is going to be at hand. Doesn't mean the end of the bull market, but we'll know that's at hand. Right? Bonds continue to pull back, which is going to support the financials, which broke out yesterday. And we sent out an alert to our ETF letter subscribers. I know Dan mentioned it in the room. And there you have the breakout. They're pushing up a little bit this morning. And some of those charts in like Goldman Sachs, which looked great yesterday, and JP Morgan, they had great days yesterday. And they're coming out of correction. So we're looking for them to continue to do well as long as those bonds go down and interest rates go up. It's going to support them. Oil down a little this morning, but recovered after this breakdown into support and the 200 MA in alignment with that, coming up into resistance, stall there. And energy sector, ETF, had this breakdown that wound up reversing and failing and coming back up into this resistance area now. We'll see how this chops around, but this looks like it's going to be, in the end, assuming it goes sideways here, proven to be a breakdown failure. And sometimes we get caught in these failures because this looked convincing as heck to me. Right? I mean, while oil hadn't totally collapsed, I mean, this was a bearish pattern. Geez. Right? It was going sideways in a range here. And it broke down, wide range bar on huge volume. And I mean, everything was there to say it was going lower, then a 1, 2, 3 continuation that didn't trigger. But when I saw that, I said, hey, this should be a no-brainer for a call spread. And this rally stopped us out of that WLL. It happens. We move on and see how we can take advantage of that intelligently. And gold just, bouncing after this climactic kind of run or drop to the downside. Yesterday, I explained pre-market about these sell setups being low odds because of the acceleration after a trending move. And you're going to let Dan take over to review the trades. So let's go in here.
That sounds like a good MT Live topic.
Yeah, we have a new one every day, Dan.
Sell setups that are doomed to fail.
Yeah.
All right, good morning, everyone.